Hello and welcome to the look ahead for Thursday, the 6th of March with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow, the main highlight is going to be the ECB interest rate decision in the US session. We will also have jobless claims as well as from Canada, the IV PMIs. Now, as far as the ECB is concerned, we are very much expecting another cut, 25 basis points, marking the sixth cut from the ECB. That would take the deposit rate 2.5% down from 2.75%. Now, the move, interestingly, comes after we've seen quite a lot of action in the euro today on news that the Germany, or announcement from Germany, that the likely to be Chancellor Friedrich Merz, together with other leaders, has announced reforms to the German break. This is basically a huge fiscal U-turn, which will enable considerably more spending. Specifically, they want it for defending on defense stocks. On defense and infrastructure. So if we just have a look here at the euro US dollar, we can have a look, see how the euro has absolutely surged higher. What this means, what this change from Germany means, is that we're going to see much more spending, which potentially could spur on the economy, but it's also expected to be inflationary. So suddenly this raises the question of, will the ECB now pause interest rate cuts? There had been some questions anyway about when the ECB might consider starting that conversation on when enough easing is enough. We know that more hawkish members of the ECB, such as Isabel Schnabel, have already been suggesting that now is a good time to start talking about when that pause will happen. I wonder whether these latest developments that we had from Germany today will encourage the ECB to adopt a more cautious approach to rate cuts going forward. Now, obviously, the Eurozone economy continues to stagnate. We're seeing inflation down at around 2.4%. It was down from 2.5% previously. But if we do see these inflationary measures and increased defense spending from the Eurozone's largest economy, and other economies such as France have also suggested they could increase their defense spending. Sorry, the light's just gone out there. So, yeah, because of that, we've seen this rally in the euro. We're also seeing, this is also a combination of US dollar weakness. We've seen the US dollar really fall lower against its major peers on these trade tariff announcements that we've had from Trump this week, amid concerns that they potentially could damage the outlook for the US economy. We've seen consumer confidence and business confidence in the region fall. ADP payrolls today came in weaker than expected. And we've obviously got, but we did have a stronger than expected ISM services PMI. So there is a little bit of a mix going on there. As I said, the ECB rate decision tomorrow, if we do see that the ECB is going to adopt a more cautious approach to cutting rates going forward, then that could see the euro push further. We're just moving above that 200 SMA as we speak. Above here, the next level to be watching on the upside is 108. And then from here, we're looking towards the 110 on the upside. As far as support is concerned, this level here, 106, immediate support. And below there, you've got that 105.30, which was the level that the euro was struggling to break out of yesterday. Also, let's just have a look at the DAX. It's worth mentioning moves in the German Bund after the announcement from the German leaders has seen a massive rise in yields. Bonds is set for their worst day, or one of their worst days since the collapse of the Berlin Wall. Just so you have an idea of what sort of seismic move we're talking about here. Now, we've seen the DAX rally. That was after yesterday's very volatile session on sort of worries over trade tariffs, but we're seeing a recovery back up towards that record high. RSI supports further gains whilst it's out of overbought territory, looking back up towards 23,300 to create a higher high and fresh record levels. Now, also, I mentioned we've got that US data. Just having a quick look here at what's going on in US stocks. Obviously, we've talked about these concerns about the outlook for the US economy. There are also some uncertainties surrounding whether Trump's trade tariffs are actually trade tariffs set to go into motion, or they have gone into motion, but or whether there are still negotiating tools. There had been comments by US Commerce Secretary Howard Lutnick that maybe Trump could be using these as negotiating tools in order to secure better trade deals. So we will see. That remains to be seen. We haven't had any softening of stance from Trump yet. That optimism we did see initial futures were a little bit higher, but again, that ADP payroll coming in significantly weaker than expected ahead of Friday's non-farm payroll is just weighing on sentiment. Tomorrow we've got jobless claims, expected them to ease back slightly after that jump that we saw last week to 242,000, expecting to ease down to 235,000 in tomorrow's reading. Now, if we get more weakness than expected in those jobless claims, that could actually raise those concerns over the outlook for the US economy and bring that 200 SMA into focus down at 57.50. That's going to be the level of we need a break below that level in order to get a lower low, and that could spark actually a deeper sell-off towards the 5,600 level. But if we find that, sorry, the light's gone again. If we find that that level holds, maybe we get slightly weaker than expected data, then that could spark a recovery, especially if we hear any news from Trump regarding these trade tariffs, that they could be rolled back or walked back. That would obviously provide a real lift to sentiment. On the upside, 5,900, 5,916 is the level to watch. We need to get above that really in order to negate this near-term sell-off that we've seen. I think that finally the one to mention that we're watching here quite closely is oil. Look at this. We've seen a really sharp drop in oil, falling well down to levels that we were last seen back in September last year, so 6 months lows. Basically, a couple of factors playing out here. We've got reports that OPEC will be increasing their output as previously planned in April. The market, I think, had been expecting that to be postponed, given given that the price was so low in oil anyway, and the uncertainty surrounding Trump's trade tariffs and what that means as far as the demand outlook is concerned. That hasn't been the case, and as a result, of traders have been caught by surprise. We're seeing that huge sell-off, drop down almost 3.7% so far today. Strong bearish engulfing candle, but we've also got concerns over the outlook, because if these trade tariffs are going ahead as they are, what that means for US economic outlook, whether there's going to be a downturn and a global slowdown as well, that can obviously impact oil prices. Then we've also got these talk of a peace deal in between Russia and Ukraine, which could also mean that those sanctions on Russia could be eased sooner, and that means that we would see an increased supply into the market as well. So lots weighing on the outlook for oil prices right now. We're looking for this level here. If we get a break below this level here, which is that 65 level that we saw back in September, next level to be watching out for is around 63, 65. That's this level here that we saw. Just bear with me. Is that one there? 60. No, that's. Yeah, 63, 65. That was the low that we saw in May 2023. It was also the 2023 low. So that will be the next one to be watching on the downside. If we, for whatever reason, see a strong recovery, which just looks unlikely given that bearish engulfing handle, but still the day's not out yet. On the upside, a rise above 68.50 could mean that we start to build a recovery towards the $70 a barrel level. So that is everything from me today. I hope you've liked what you've seen. If you do, then please do give this video a like.